If you're receiving Social Security benefits, there are critical changes coming in June 2025 that could directly impact your monthly payments, and one of them might not be as good as it sounds. In this video, I'll break down the exact payment dates for June 2025, explain President Trump's proposed $4,000 senior bonus and why it might not help the people who need it most, plus reveal a major policy change that could cut your future benefits in half if you've been overpaid. Stay until the end, because I'll share how recent changes to Medicare enrollment could save you hundreds of dollars on your healthcare costs. Welcome to Financial Area, your trusted source for Social Security and financial updates. If this information helps you, please hit that like button and subscribe for more money-saving content delivered straight to you. Let's start with what you came here for. The exact dates your Social Security payments will arrive in June 2025. The Social Security Administration follows a specific schedule based on your birth date, and knowing these dates is crucial for planning your monthly budget. If you were born between the 1st and 10th of any month, your Social Security payment will arrive on Wednesday, June 11th, 2025. This applies whether you're receiving retirement benefits, disability benefits, or survivor benefits through the regular Social Security program. For those born between the 11th and 20th of any month, mark your calendar for Wednesday, June 18th, 2025. This is when your payment will be deposited into your account, or your check will be mailed, depending on how you've chosen to receive your benefits. If your birthday falls between the 21st and 31st of any month, your payment date is Wednesday, June 25th, 2025. Remember, this system has been in place for years and rarely changes, so you can typically count on this pattern month after month. Now, here's something important for SSI recipients. If you receive supplemental security income, your payment schedule works differently. Your June SSI payments will actually arrive on Friday, May 30th, 2025. This might seem confusing, but it happens because SSI payments are supposed to arrive on the first day of each month. Since June 1st falls on a Sunday, the Social Security Administration moves the payment to the last business day of the previous month. This early payment can actually be helpful for budgeting, but it also means you need to make that payment stretch a bit longer until your next regular payment arrives. If you're receiving both Social Security and SSI, you'll get two separate payments on two different dates, so keep track of both schedules. If your payment doesn't arrive on the expected date, don't panic immediately. Sometimes there can be delays due to banking processing or federal holidays. However, if your payment is more than 3 business days late, that's when you should contact the Social Security Administration to investigate. Now let's talk about something that's been making headlines. President Trump's proposed $4,000 bonus for seniors. This sounds incredible on the surface, but the reality is more complicated than most people realize. What President Trump has actually proposed is a $4,000 tax deduction for seniors over 65, not a direct cash payment. This is very different from eliminating taxes on Social Security benefits entirely, which was another proposal that's been discussed. A tax deduction reduces the amount of income you pay taxes on, but it doesn't put money directly in your pocket. Here's how this would actually work in practice. If you're a senior who owes $3,000 in federal taxes and you qualify for this $4,000 deduction, the actual benefits you receive depends on your tax bracket. If you're in the 22% tax bracket, that $4,000 deduction would save you about $880 in taxes. If you're in the 12% bracket, you'd save about $480. But here's the catch that many people aren't talking about. This deduction primarily benefits seniors who have higher incomes and actually file tax returns. If you're a lower income senior whose only income is Social Security, you probably don't file a tax return at all because your income is below the filing threshold. This means you wouldn't benefit from this tax deduction at all. The seniors who would benefit most are those who have retirement account withdrawals, pension income, or other sources of taxable income in addition to their Social Security. These are typically middle to higher income seniors, not the ones struggling to make ends meet on Social Security alone. This creates a situation where the seniors who need financial help the most, those living solely on Social Security benefits, get no relief from this proposal, while seniors with higher incomes get a tax break. It's important to understand this distinction because the headlines often make it sound like every senior would receive $4,000, which simply isn't true. Additionally, any reduction in tax revenue means the government has to find that money elsewhere or add to the deficit. Some experts worry that reducing tax revenue could eventually impact Social Security's long-term funding, though that's a complex issue with many variables. Let's move on to some policy changes that are definitely happening and will affect Social Security beneficiaries directly. These changes might not be making as many headlines, but they could have a significant impact on your benefits. First, there's an upcoming change to the full retirement age that you need to know about. The full retirement age is gradually increasing, and soon it will jump by 2 months to 66 years and 10 months. This affects how your benefits are calculated if you haven't reached full retirement age yet. If you retire before your full retirement age, your benefits are permanently reduced. If you work past your full retirement age, you can earn delayed retirement credits that increase your monthly payment. This 2-month increase might seem small, but it can impact your lifetime Social Security income by thousands of dollars, depending on when you choose to start claiming benefits. This change doesn't affect anyone who's currently receiving benefits, but if you're still working and planning your retirement timing, you need to factor this into your calculations. Now here's a policy change that could affect current beneficiaries, and it's not good news. The Social Security Administration has changed its overpayment recovery policy in a major way. Previously, if the SSA determined you had been overpaid benefits, they could only recover 10% of your future monthly payments to pay back what you owed. That rate has now increased to 50%. This means if you receive $2,000 per month in Social Security and the SSA says you were overpaid, they can now take up to $1,000 per month from your future benefits until the overpayment is resolved. Overpayments can happen for various reasons. Sometimes there are errors in calculating benefits, changes in your work income that weren't reported promptly, or administrative mistakes. The concerning part is that beneficiaries often don't realize an overpayment has occurred until the SSA begins recovery proceedings. This policy change can create serious financial hardship for people who are already living on fixed incomes. If half of your Social Security payment suddenly disappears, that's a major budget crisis for most beneficiaries. If you receive a notice about an overpayment, you have rights. You can request a waiver if you believe the overpayment wasn't your fault and paying it back would create financial hardship. You can also request a payment plan or appeal the determination entirely. Don't ignore these notices. They won't go away, and the consequences get worse over time. Finally, let's talk about something positive that could save you money. Recent changes to Medicare enrollment options. Medicare rules can be confusing, and many seniors end up paying more than they need to for their health care coverage. The Medicare system has made some changes to enrollment periods and plan options that could benefit you. You might be able to switch to a plan that better fits your needs and potentially save money on premiums, deductibles, or prescription drug coverage. This is particularly important because Medicare costs continue to rise, and what was the best plan for you last year might not be the best choice now. Many seniors stick with the same Medicare plan year after year without realizing they could be saving hundreds or even thousands of dollars by switching to a better option. The key is understanding what coverage you actually need and comparing that to what's available in your area. Medicare Advantage plans, Medigap policies, and prescription drug plans all have different costs and benefits, and the right combination depends on your specific health needs and budget. If you're feeling overwhelmed by Medicare choices, you're not alone. The system is complex, and the stakes are high because choosing the wrong plan can cost you significant money. Getting professional help to navigate these options can be one of the best investments you make in your financial security. Remember, your Social Security benefits are a crucial part of your retirement income, and staying informed about changes to the system helps you make better financial decisions. These payment dates, policy changes, and opportunities we've discussed today could all impact your financial well-being. Whether it's planning around payment dates, understanding the real impact of proposed tax changes, protecting yourself from overpayment recovery, or optimizing your Medicare coverage, staying informed gives you the power to make choices that protect and maximize your benefits. If this information was helpful to you, please give this video a thumbs up and subscribe to Financial Area for more updates on Social Security, Medicare, and other financial topics that matter to you. We're here to help you navigate these complex systems and make the most of your benefits. Thanks for watching, and I'll see you in the next video.